Everybody knows that moving is not the most fun thing you can possibly do. But in this video, I'm gonna go over the 5 things that you should definitely be aware of if you're looking to move, especially when you're purchasing, and definitely if you're buying and selling at the same time. And if you don't know who I am, my name is Christian Stubbs. I am a team leader and founder here at Onyx Homes. We are a real estate sales team that helps our clients buy, sell, invest in real estate all over Southern California. So let's dive right in. The first tip of 5 that I have for you is that you can actually buy your next home before you sell your current property. Or at least a lot of people feel like they need to sell their current home before they can buy their next one. And what they're really saying is you need to take your equity out of your current property and use that as your down payment to purchase your next home. Or maybe you have a ton of equity in your current home and you can buy your next home for cash, but you have to sell this one before you can buy that. And I have a program for you that can make your life so much easier. Now, this isn't for everybody, but it is a really cool program for those that it works for. What it basically allows you to do is pull the equity out of your current home and use that to buy your next property before you sell your current home. So the program is called Buy Before You Sell, and it does exactly that. So when this program works, it's as simple as there's really 4 steps to this. First, you start by getting approved for the program. So you have to get approved if you're getting a mortgage. Obviously, you have to show that you can actually buy the next property. And then your house has to get approved, meaning they have to look at your house and see that it's livable and see that it's going to sell. A really easy process that takes a couple of days, maybe a week, if you're going through the process slowly. So once you're approved, you can then go shopping. So you can go out window shopping for properties, you can go touring houses, and if you find something you like, you can go ahead and write an offer that is not contingent upon you selling your current home. So this allows you to write an offer, and if you get your offer accepted, you pull the equity out of your current house, use that as your down payment for your next property, and then once you've moved into your new home, then you can actually sell your old home and get all of the money back. Now, obviously there's fees associated with this, but they're really not that high. In another video, I have a lot more information about the Buy Before You Sell program, but if this is something that remotely sounds interesting to you, or if you know of somebody, you should definitely share this with them. It's a really valuable tool to be able to use. And here's a couple key points. When you are buying a property non-contingent, you are typically able to negotiate a better deal on the buy than you would if you had to sell your property. Now, the other side of that, when you're selling your home, if you've moved out of it and you could do those little fix-its that you didn't want to deal with while you were living there, maybe you paint, carpet, stage the house, that house is likely going to sell for quite a bit more money than it otherwise would have if you were trying to marry up these timelines. So this program can actually, even though it costs a little bit of money, it can actually net you a lot more money in the process and make your life easier. So that's the Buy Before You Sell program. That's our tip number 1. Tip number 2 is really a myth. This is you have to have 20% down to buy a property. And I find it amazing that this is still news to people, is that you do not need 20% down to buy a home. Now, yes, there's trade-offs. If you put less than 20% down, most of the time you're gonna have what's called PMI, or private mortgage insurance. This is something that's an additional safety net for the lender that they're actually gonna get paid back. And for you as a borrower, there's really no benefit to it outside of you actually can purchase a house with less than 20% down. Most homeowners that are getting into the market, especially first-time home buyers, are taking advantage of less than 20% down payment options. You have several different ones. Your conventional loans, which just means normal loans, are anywhere from 3 to 5% down options. 5% down is probably the most popular one. You also have FHA loans, which are a little bit different, but you have 3.5% down options there. FHA is really good if you have a unique situation. If you have less than perfect credit, the FHA loan might make more sense than the conventional loan. That's a conversation for a lender. But what a lot of people don't realize, in Orange County, you could buy a home up to $1.1 million with just 5% down. Now, obviously your payment's gonna be higher because you're putting less money down. This is a really powerful tool in order to be able to buy your next property sooner than you might have thought. And just think about this, at the end of the day, if you already have 5% down saved and you're waiting to have that 20% down payment because you don't want to pay that PMI, which might be a few $100s a month, how long do you have to wait in order to save all that money? Are prices going to go up while you're saving that money? Are interest rates going to change while you're saving that money? Oftentimes it makes more sense to get in sooner, hold on to that property, own it for a little bit longer, and then you can move on and you're going to be paying down that appreciation while you have it. Here's an important thing to mention with PMI. This is kind of a bonus tip, is if you buy a property with 5% down, you have mortgage insurance. Once that property gets down to a loan to value of 80%, you call the lender and your PMI will fall off. So that means you can save the money. Or if you're refinanced down the road and your loan to value is 80% or less, you can get rid of PMI there as well too. So when I bought my property, I could have done 10% down and I chose to do 5% down because it really didn't cost very much more. So find out if that's an option for you, and maybe it gets you into a house sooner than later. All right, number 3 is that you can get a better interest rate. Now, a lot of the times a home buyer will go with the lender that they were either referred to or the first person they talked to, or maybe a commercial like Quicken Loans or Lending Tree or something like that, or a big bank. And a lot of the times these maybe aren't the best options. So my advice with this, there's a lot of different things here, but when you're making a purchase that is several six figures or maybe even more, millions of dollars alone, you should be shopping around. And it is amazing to me how many people are so worried about the 1 or 2 point credit ding that they refuse to shop their loan. Now, if you're shopping for a $500,000 loan, that 1 or 2 credit points that you're worried about losing is probably not as valuable as if you were to save 0.5% over the life of the loan. You would save tens of thousands, if not $100,000 by getting a better rate. So do yourself a huge favor, is when you get close to buying a property, make sure you're shopping with at least 2 or 3 different lenders. We can make some recommendations, and there's a lot of different lenders out there, and just like realtors, they're not all created equal and they don't all have the same loan products. You really want to make sure you're doing yourself a favor here, making sure you're getting the best rate. Another thing I would recommend doing is if you're not quite ready to talk to a lender yet, that's okay. You could reach out to us. We'll give you a ballpark of where rates are at, and then you can go over to a mortgage calculator. We have one at onyxhomes.com. Scroll all the way down to the bottom, hit mortgage calculator. I think it's the best one. I might be biased. It's super easy. You can plug in what your price is, you can plug in the interest rate, HOA if there's there, and it'll show you what the different affordability will be. You can slide your price point up and down so you can see your mortgage payment go up and down and find out what your comfort zone is. It'd be a really good start. And once you have that purchase price that you feel like is your comfort zone, then you can go over to SoCalHomesForSale.com, start your home search. I would recommend setting up a saved search based on kind of the criteria that you're looking for, so you can start getting yourself educated on the market. When you hit the favorite button or that heart, it'll let you know when there are price drops, status updates, and when that property closes, so you can really start narrowing in on what's going on in the market. All right, number 4. Now this, again, I'm amazed every day that I hear this, but not every house is on Zillow. There really is. Outside of being huge major companies with frankly really good websites, there's nothing special realtor.com, Zillow, Redfin, or any of these other websites have. They simply pull the information off of the MLS and put it on a website. Now that means that not every home that's for sale is on the website. So if you're on Zillow and you're thinking, I'm gonna go from Zillow to Redfin to realtor.com because I don't wanna miss any of the properties, that's not the best way to do it. Also, I would recommend going to SoCalHomesForSale.com, because if you wanna go ahead and tour a property, we don't sell your information. That website goes directly to your agent. You don't have to worry about it. You go to Zillow, Redfin, or realtor.com, type in your information because you want information on a property. They just simply sell your information to an agent who then hopefully answers your question. So you can go to SoCalHomesForSale.com and that goes directly to us or your agent. And that is a much better experience for you because I promise we know what we're talking about. So my point of these websites not having all the properties is once you go onto SoCalHomesForSale.com, set up that saved search that we just talked about, what happens is that shares us what you're looking for. And when we know what you're looking for, or when you communicate with your agent what you're looking for, that allows us to be able to share with you the off-market properties. So we get an email every single morning at 6 a.m. and it shares with us what are the properties that are going to come to the market in the next coming month or weeks, or it tells us properties that are not going to be coming to the market. So we get an update with a handful of properties every single day of what's coming to the market or what might not come to the market, so we can get a jump ahead of it for our clients. This is something that if we don't know what you're looking for, we're obviously not going to be able to share it. So my advice is, regardless of whenever you're looking to move, I would actually get in communication sooner than you think with your agent. Something that's also surprising to me is a lot of my clients will say, hey, I don't want to bug you, I don't want to whatever, but we're looking to move in the next 6 months. So when we get closer, I'll reach out. And for us, we're used to very, very long sales cycles. For example, I just helped a client that we've been working with for 3 years, and we've been stepped side by side that entire time, making a game plan and putting it together. So get involved with your agent sooner than you think you should, and I promise you're not going to be bothering the agent, especially if you're communicating on what you're trying to accomplish. So these properties that are off market are not on Zillow, and the only way to get them is to be communicating with your agent. That's number 4. Number 5 is saving cash out of pocket. This might be the best one. This might be, depending on where you're at in the process, this might be something you are using right now if you're looking to buy a property. So the more leverage you have as the buyer, the better deal you're gonna be able to get. Obviously, everybody knows that. But a lot of the times, people zero in on getting the lowest price as the best deal. Not always the case. So saving money, cash out of pocket is something that is very beneficial for a lot of different people. There's a lot of different ways to do it. There's also a lot of reasons why you might go this route rather than just getting a little bit lower price. So here are some examples. When you're negotiating a deal, you can tell the seller that you'll pay them this price, but you want them to credit you a certain amount of money towards your closing costs. So if you're not familiar with what closing costs are, it's basically just the cost of doing business when you're buying a property. All of the different things that have to happen in order to exchange property typically cost between 1 and 3% of the purchase price. Those are your closing costs. So what typically ends up happening is you can negotiate with the seller and you can say, hey, I want to buy your house. I'll pay this price, but I want a credit of 3% of the purchase price. And that could cover all or some of your closing costs. This can help you with a couple of different things. It can help you bring less cash to the table, number 1, but also it can do some creative things like help you get a better loan. There's a couple of different ways to buy down your loan to make your overall payment more affordable. There are things like a 2-1 buy down where you get 2% off your loan in the first year, 1% off your loan in the second year, and then it is the normal percentage for the rest of the loan. This can save a ton of money up front for you as the home buyer at the cost of the seller giving you that credit. You could also buy down the rate for the life of the loan, which would save you way more money long-term, assuming you keep that loan for a long time. There's a lot of different options here, but it also could just get you more cash in your pocket when you close. So maybe you can go in and do some renovations, maybe you can do some repairs, or do whatever you want with it. So this is one way that we can put very creative deals together that'll keep more money in your pocket and maybe make a bigger impact than just a few $1,000s off the selling price. All right, so those are the 5 things that I wanted to share with you today. And just for a recap, we have the buy before you sell program where you can buy before you even think about selling your current home. You can buy with way less than 20% down and it not be the end of the world. You can get a better interest rate, and there's a lot of different ways to do that. Number 4 was that not every single house is on Zillow, and you want to find out how you can get all the houses. And last but not least, you can get a better deal without just asking for a better price in the house. You can keep more cash in your pocket. So if you like videos like this and you find them helpful, make sure to like it, subscribe to the YouTube channel. And if you aren't already on our newsletter, go over to ocmarketupdates.com, register for that, and you'll get videos like this in your email inbox every single Friday. Again, my name is Christian Stubbs, and we'll see you in the next video.